tying this in actually to Tesla real quick, we're going to try to transition to Tesla, is the Chinese demand pocket that we've seen, and now Tesla China lowered prices. Do you think, given how much respect Elon has for China, the government there and how they do things, I mean, you got to say, for all the negatives with China, the government on control, one thing I have learned is there's a lot of positives with what China has done, lifting like 400 million people literally out of poverty in the last like 10 or 20 years. There's so much
Mhm.
good they've done as a country. It's easily shadowed by these power grabs or whatever. So there's a lot of good overall with China, I'd say. And so I think the reason I'm saying that is like I think it's okay to respect China and like Elon probably I think does. And um, do you think there's some kind of coincidence that, even though everyone thought they should have lowered prices before, that they waited until after this Congress, this fifth Congress, and like the new political roadmap was unveiled before Tesla China decided to lower prices to make it more affordable for the common person, the perception looking like that? Do you think there's some coincidence there?
Um, I, it would surprise me if it was actually directly related to that. I think given the fact that they want to, export more earlier in the quarter, even though they're getting rid of the delivery wave, they're still going to export a lot in the first couple quarters or the first couple
Hmm.
months. So to me, it kind of makes sense that you've got, a couple free weeks where you can see how your order rate looks at the old pricing level, and just kind of, give consumers a chance to, you know, okay, it was expected on October 1st. Well, that didn't happen. But how does your order rate change? And, get a
Yeah.
couple more weeks of data points in there to say, okay, yeah, we really do need to lower prices. And it might give you an idea of how big of a price decrease you need to go at. Because I think there's a risk of like lowering by 3% and then saying, oh shoot, that wasn't enough, we need to lower like another 3% or something like that. So it may just
Yeah.
be, wanting to get a little bit more time at the order book. I'm not sure what the political gain would be by, kind of waiting until this Congress was over, but I could be
Mhm.
wrong.
Yeah. I mean, either way, it seems interesting, the timing, that it could have easily happened at the end of last quarter to get that last 20,000 sold, I think. But um, they waited till coincidentally, like right after this this Congress ceremony, this in China, reconfirming President Xi and letting and also I think the second most important person in politics, according to the economist analysts, who study this and that I listen to, according to them, the second most important person in China politics right now, the person who came out behind President Xi on the red carpet, is the guy that I think the mayor or the governor of Shanghai, and that's where Tesla's factories are, right? And so
Mhm.
there's a strong correlation. I'm just like going on like what do you call it? Conspiracy theory thinking with Tesla here, thinking like maybe there's a reason they waited until right after the Congress, because they have such strong ties with Shanghai and they have to keep that, and President Xi and all of China's government, CCP, in order to have Tesla thrive there, that they wanted to look good, like, hey, we're lowering the price for the common, Chinese citizens here. We're trying to participate in your vision for the future, President Xi, and make it kind of like getting brownie points with them. So that's just my conspiracy thought of why the coincidental timing of it with that. Anyway, so what else with Tesla? Is Elon selling shares? I suspect he was selling shares yesterday, maybe some today. We'll find out Wednesday night. There's like the 2 business day reporting window. So we'll find out Wednesday night at the latest if he was selling on Monday. If he didn't sell Monday and he was selling today, we would find out probably Thursday night. And typically in the past, he's sold over like 3-day periods, maybe the most on the first day and a little bit more on the second, a little more on the third to get his accomplished. Maybe in this case, it's $3 billion or $5 billion worth of Tesla stock. I'm not sure. But if he is selling, it seems like to me, there was some volume spikes mid morning. That seems like what happened in the past when he was selling shares. What are your thoughts, Matt? Do you think he was selling?
Yeah, I suspect he probably. It's the deal is expected to close Friday. You don't want to, you don't want to like sell on Thursday for for a transaction that needs to fund on Friday. Like there's actual
Yeah.
settlement period. So like I
Yeah.
wouldn't expect he even sells tomorrow. Like because that's just too close to actually get the transaction settled and the funds transferred. So I think he'd want to have that um, available as cash, kind of sitting in the account by Wednesday, Thursday at the latest, so that there's no question about the funding. So I suspect today's probably the last day he possibly could sell. And I think that's just going to be good news. I'm excited for this week to be over, honestly.
Yeah, yeah, me too. I mean, a friend of mine asked like, "Oh, when should I buy?" A friend of mine wants to buy Tesla. Should he buy it now? And I'm like, maybe some now and some in a week." Just because you don't know if there's more selling going on this week and it's going to get lower. But the whole market's up today, including Tesla. So maybe that wasn't a good, friendly family. I don't give advice. We're not registered as advisors. Just telling a friend and a family member. Anyway, with Tesla, Elon selling shares, maybe or maybe not. We'll know in a couple days. Hopefully, it's the last time is to do that. And also with Tesla, the biggest thing is Q3 earnings came out. We talked about it last week before the earnings came out, and it's come out. It's sort of a mixed bag, like you said. That's how we thought about it. And long term, I'm very happy with it. But in terms of like gross margins and the profit, it was a little, I guess, gross margins. What was the most underwhelming, or what was the part that we had highest expectations on that were not met, would you say, Matt?
So I actually did like a little waterfall presentation of kind of
Yeah,
what's
let's
the
see it.
difference. So let me share my screen here.
Okay.
Um,
For those of
so
you on Twitter Spaces, you can watch us on YouTube Live as well. We have a few hundred people on YouTube Live, but usually like 50 or 80 people on Twitter Spaces. So, all right. So let's go here. So this
all
is a
right,
waterfall.
so
Okay.
the waterfall. So we were forecasting $1.32 in earnings per share for Q3, and really the two almost by far the two biggest factors were the lower ASP. So average sale price actually decreased quarter over quarter.
And we thought it was going to
Um,
increase, right? We thought
We
it was
thought it
going to
would it
increase.
would increase, yeah. So that one's actually kind of puzzling to me because you had all
Yeah.
these price increases with the 6 month backlog, so it kind of made sense that those would just continue to tick up. So I have a little bit of a theory around here, which I'm not sure how much I believe in it, but it's at least interesting to think about. Is you had obviously the 100,000 hertz orders, and we didn't really have a whole lot of visibility into how many of those were filled
Hmm.
historically. And then we also had like your Model X, and I know there were several others who had like very low priced vehicles from
Yes.
like that were ordered 12 months or more ago.
Yeah. Yeah.
And
Yeah, my
so
model just real quick, my Model X, we put a deposit on, like, over 2 years ago at, like, the original price of, like, 75,000, and now they're selling for, like, 110,000. So we still got the original price honored by us, so that's what he's talking about, why some
yeah,
people are getting these late deliveries at the original prices. Anyway, go on, Matt.
so for ASP to have decreased as substantially as it did, to me, it seems like it would be hard for that to happen just as a result of product mix, like between the
Yeah.
China Model Y and X, or China Model Y versus like the European Model Y, for example, which obviously the European one has a higher sale price. So it's possible that this decrease was driven by, like, imagine you had, I don't know, 75,000 vehicles that were this, like ordered a year ago or so, something like that. So that could be like a big driver in the sequential, ASP decrease. So if that's true, and again, I'm not sure that it is, but then we could actually see a really drastic quarter over quarter increase in ASP in Q4. So I
Mm.
need to give that some more thought and try to figure out what I think is most likely. But it just seems very odd given the price increases that we've had and the backlog that would take some time to get through. That ASP would be decreasing. So I would expect in Q4 ASP to increase, but that'll be offset a little bit by the lower prices in China now. So a lot of
Yeah.
moving parts in that.
Was was any of the analysts expecting the average sales price to decrease? Do you know?
Not
I
that
don't
I
think so.
saw.
I didn't
No,
see
no,
that
that
either. I
was
think everyone got that wrong. Yeah.
everyone got that wrong because the big commentary I saw from like all the headlines was that Tesla misses on revenue, which would,
Yeah.
when the deliveries are known, then that's got to be ASP being different. So I think that was a surprise across the board. And then
Yep.
the other really surprising thing to me was that the cost of goods sold increased so much as well. So you actually had lower price and higher cost. So that really kind of squeezed margins much more than we were expecting.
Mhm.
And so that accounts for a 17-cent variation to what we had modeled. And this was most surprising to me because it came out like a couple weeks before the end of the quarter. that Martin Vieca had spoken with some analysts and was talking about how they got their cost of goods sold down to, I think it was like $37,000 or something like that. So I was assuming that was like a relatively current number, and perhaps it was for Shanghai and Fremont kind of combined. But I think once you add in Berlin and Austin, the impact was several $1,000s higher than that $37,000 figure. So that created a pretty big variance and squeezed the gross margin. So then the couple other things here I'll walk through quickly. The regulatory credits, those were almost $100 million lower than we'd been forecasting.
3 cents.
Energy,
Yep.
so that accounts for 3 cents decrease. Energy and services margin, that we were pretty close on but a little bit high.
Only
So
1
that
cent differential. Okay.
1 cent differential. And then this is the big one, the income tax rate. I've been assuming a 15% income tax rate.
Yeah.
And it came in under 9%. So it was like 8.5 or something like that. So that's kind of a non-sustainable
7 cents
benefit, I
differential.
think, which is 7 cents to the upside. So, and then the shares outstanding was a little bit lower than I'd been expecting. So as Tesla, and that accounts for 3 cents of outperformance versus our budget. So you add all those different variances up and you get to $1.05 versus the 132. But on the shares outstanding, this one's kind of interesting. I'm going to stop sharing my screen here, but it's so as Tesla has continued the stock-based compensation program and Elon's CEO performance award, the shares outstanding have really increased pretty significantly each quarter, but that rate of increase seems to have drastically slowed down, which is a really good thing because that limits dilution.
Yeah.
And if Tesla does authorize a buyback, it could actually reverse the other way. Which is kind of crazy to think about. So then you could be going from, I'd been assuming kind of perpetual increase in shares outstanding to, fund stock-based compensation. And that, creates dilution, which compounds over time, which is pretty meaningful. So if you go out to like 2030 and you got like, oh, we got like $50 of earnings per share or something like that. Well, if you have a buyback, then, instead of diluting over time, it might be your $50 that assumed dilution might be like $70 if it's actually, undiluting. I don't know what the right word is.
What's the opposite word? Preclusive? I don't know. What's the opposite of die?
If you have a buyback, if shares outstanding are being retired, I guess.
Come into the comments, help us out. Yeah, all right.
Technically, they're called treasury shares when the company buys them back, because they go and they kind of sit in the balance sheet. That's just an interesting data point that I'm gonna have to probably go back and lower my assumptions around to what extent shares outstanding increases over time. So that one's actually kind of optimistic, I think, about long term.
Yeah, absolutely. So Rob Markovich says concentrating share. Yeah, concentrating, that may be the opposite of diluting. Yeah, so that's interesting for modeling out in the future. Yeah, if they do the buyback. I think it seems like our earnings, even though there's just those two big misses, without those two big misses, it would have been like very close to, I think it would have just been like 6 cents off or something, that without the two big misses, the average selling price and the cost of goods sold. So
those are pretty important to get right, though. So
right. Yeah.
I think it's fair to say we missed on those, but it's also surprising. Like the logic of those moving the way that they did is surprising to me. Normally it seems like you and I have a much better kind of bead on what Tesla's doing in terms of like profitability and ASPs and COGS over time. Thanks, Farzad, for the supportive comments. Farzad's in the comments here saying, Matt, you suck. So it's surprising that like you're always going to miss a little bit on like the magnitude of the change, but it's very unusual to be off on the direction of the change. So that's surprising to me.